Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, September 9th, 2019. It's the first day of the trading week, and we are now again in the final hour of the trading day. As many of you know, I believe the prices near the close of the market, as close as you can get them to the close of the market, are the most valid prices of the day. During the day, you have the algorithms, you have the day traders moving the prices all around. In the last hour of the market, the large financial institutions and the market makers take control of the market and move it to what I believe, in my opinion, is the most valid prices of the day, and therefore those are the prices that I make the majority of my buying and selling decisions from. So let's make sure that we're up and running. Hey, there's JT. How you doing, JT? It's good to see you, my friend. Thank you so much for coming by. I hope you had a nice weekend. So anyway, the market is was much higher earlier in the day, and then we've been going down most of the day. The Dow Jones is up 20 points, so that is up a little bit. The Nasdaq's down 40, it's down about 0.5%. The S&P is down about 4.5 points, about 0.15%. So nothing crazy today, but I guess the takeaway is that we were much higher earlier and those prices got sold into. I am having a good day. I'm glad to report, even though, so it is a pretty good, nice green day. So we will see what happens at this end of the market, because that's what really counts, right? So, all right. Hey, Shelton Johnson. Hey, how you doing, Shelton? Nice to see you, Greg. Or nice to see you. He says, "Hi, Greg." Hello back. Anthony, hey, buddy, how you doing? Good to see you. Hope you had a good weekend. And Anthony and I are going to be working together, so I look forward to working with you tomorrow, Anthony. So thank you for coming by. I appreciate it. Thank you. I got your email. I hope you got mine back. All right. So listen, the format for today, as usual, is first of all, we're going to run the U.S. legal disclaimer. Second of all, we're going to come back. We're going to take a look at all my current positions. We're going to take a look at when I bought them, why I bought them, and more importantly, how I'm going to manage them if they go up or they go down. And then after that, we're going to do a little bit on trader psychology. As you know, I'm a big fan of trader psychology. I think it's the secret sauce in whether or not you're going to be a successful trader in the long run or not. We in trading kind of brings out the worst of our emotions, the fear and the greed, disappointments, euphoria. And we always have to, keep in mind, we have to be steady, even-keeled. We have to treat this like a business. We can't take too many positions. We have to take positions when we're supposed to take them. And so, in my opinion, it all comes down to position sizing. If you position size correctly and conservatively, you're not going to have the emotions that too large a position size will bring out in you. And the larger the position size, the more emotions you have, the less well you are going to trade. So, let's think about trading in the long term. Let's look at every single trade as the next one of the next 1,000 trades. Not have to put too much energy, not too much emotion in any one trade. Just know that if you pick good setups and if you have an edge, that edge will eventually play itself out in the long run, but you have to stay in the game long enough to let that edge play out. So we're going to do a few minutes on trader psychology. Then we're going to come back. We're going to go through my watch list. We're going to go through every single stock in my watch list. We're going to look at the technical levels, the support, resistance. We're looking at indicators like MACD, RSI, moving averages, ATR channels. And I mention this each day, but the way I look at technical indicators is that I look at them as groups of buyers. And if you want something to go up, you want to have other buyers in your camp, right? You want to have other people buying when you are buying. And so when I look at indicators, I like to see 1, 2, 3, 4 of them line up, because I look at that as several groups of buyers coming in, and the more buyers that can come in while you're getting in, the better. You don't want to start getting into a stock when, from a technical standpoint, you have a confluence of different groups of sellers coming in. So anyway, hope that makes sense. And then, so we'll go down through, we'll mark some that look like possible candidates. And then at the very end of the day before the close, we'll go through the candidates and we'll whittle it down to 1 or 2 or 0 if we can't find anything. And then after that, after the market closes, if you have any questions at all about anything I discussed today, if you're not clear on anything, don't be shy. Just type it in the chat and I'll do my very best to clarify it. If you would like me to look at any particular stocks, stock symbols, I'm happy to do that and give you my humble opinion. And also, if you're having any trading issues, if you find some repeating patterns that are maybe sabotaging your trading, and if you feel comfortable, put them in the chat. Let's talk about them, see if we can find a solution. So that's going to be the plan. Hey, Mount Doji, how you doing? Mount Doji says, hello, sitting on a call, but we'll join once it ends. All right. That sounds like a plan, Mount Doji. So, all right, well, let's run the U.S. legal disclaimer, get that out of the way, and I will be back in about 40 seconds. So hang tight, please. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, good. Hey, Marco, good to see you. Nice to see you again. Thank you for coming. Happy Monday to you as well. So, all right, well, let's get started and take a look at my current positions, and we'll talk about when I bought them, why I bought them, and how I'm going to manage them moving forward. So this has been a great trade on Amazon. I did buy Amazon back here on the 26th of August. The previous day, we closed under the 200. On the day I bought it, we closed above the 200. This is a good long-term back-tested approach to trading Amazon. It's very simple. You stay out of Amazon under the 100-day and you keep in it over the 200-day. That's the mechanical version of this approach. I do not trade this mechanically, because if you trade mechanically and you just hold, you have to hold through earnings. I don't like to hold through earnings. I think it's a big gamble. So on individual stocks, I will use the entry of the mechanical system to get me into the trade, but then I will trade it discretionarily. And as you know, as the stock moves up, I will phase out to lock in some profits. I like to lock in profits. I like to sell a portion of my position to the market when it really wants it. So you can see this has been a great trade ever since, from 1765. Now we're at 1828. I did hit one profit target today near the very top, so I'm glad I got out of that. I am considering, remember, this is a discretionary trade, so I have the ability to make discretionary moves. I really don't like what happened today. We pegged the second ATR channel. You can see currently, at least, we have a V1 to the downside. Here is day 1. Day 2 goes above, washes out day 2, washes out day 1, and reversed. And currently we are lower than day 1's close. So, I have phased out of about 80% of this trade so far, and I don't like this price action. So as long as this V1 triggers at the end of the day, meaning today's close is lower than yesterday's close, I'm going to go ahead and I'm just going to lock in the rest of the profits on this trade. I don't like that we rejected the second ATR channel. And again, I don't like that currently we have triggered a V1 to the downside. It's been a really good trade. And I don't feel bad at all about locking in profits at this point. So that's the plan. If we somehow rally at the end of the day and we close higher than Friday's close, meaning that it's not a valid V1 to the downside, I will go ahead and keep the remaining 20% that I have. But the good news is hit one profit very close to the top today. Bad news is it has reversed and currently V1 to the downside. So, that's a signal for me to consider just locking in this whole trade. But it was a really nice trade. DDM. Okay, so Amazon, I entered on the mechanical system, but then it turned into a discretionary trade. DDM is the double leverage Dow. This is a completely mechanical trade, so I have no discretion here. I bought it on the 26th of August. Previous day, we closed below the 200. On the day that I bought it, we closed above the 200. That is the signal. This also back tests well. It's profitable long-term approach to trading DDM. I did enter here at 45.75. Next day, we held above the 200. Next day, in the morning, we went below the 200, but again, I make my buying and selling decisions based upon the close, and so intraday, this doesn't matter, and it did close above the 200, which kept me in the trade. You can see it's been a really nice trade. I've been phasing out, phasing out, phasing out, phasing out. This bar right here, had this been a mechanical trade, I would have gotten out here because we moved up nicely, then we closed below the low of the previous day if it was a discretionary trade. But because this is a mechanical trade, it's on autopilot, it's a robot trade, I kept it. And in this particular situation, it worked out well. So no profit targets today. You can see I have my 3 profit targets up here. It is up slightly. It's up about 0.25%, which is good, but no profit targets. So going forward, I'm just going to continue to phase out of this trade if it goes my way. If it doesn't go my way, my stop is a close back below the 200-day moving average. And if it went all the way back down here, that would be unfortunate, but I did phase out profitable levels all the way here, so it would mitigate that. Don't get me wrong, I don't want it to go down, but I'm just pointing out if it does go down, I've phased out of a majority of my position in profitable levels, and that's another reason I like to phase out. Now, listen, phasing out, it's not the end all be all. There's positives and negatives to phasing out. I mean, obviously, do I wish I would have not phased out? Of course, because I phased out at lower levels, right? But if we have an unexpected big down move, then I'm glad that I did. So it's not that phasing out's the way to go. It's just the way to go for me because I trade pretty large positions, and by phasing out, it keeps me, it's just a psychological thing that I got rid of some, got rid of some, got rid of some, got rid of some, and it allows me to keep the trade longer than if I just had one entry and one exit. But again, that's just a personal preference. One entry, one exit works well for a lot of people. Stephen Burns trades one entry, one exit. It certainly cuts down on commission costs, right? So, there's no right or wrong way to trade. You just have to know yourself, and you have to, trade your personality. And for me, this works out. But there are pluses and minuses to it. But anyway, so far so good on DDM. All right, so Netflix. So I did buy Netflix on the 5th of September. The reason I bought it, there were several reasons why I bought this. First of all, we had this really nice V1. Here's day 1. Day 2 washes out day 1. The close was above day 1's close. That is a valid V1. On top of that, we had a bullish engulfing bar. This bar is lower than previous bar, higher than the previous bar. On top of that, we went under the first -1 ATR channel. That's the green line, closed back into the channel. That's positive. We also, here was the low of the previous range, here and here and here. We went under all these previous ranges, closed back over. So this is a false breakout to the downside and reversal. And on top of that, we have a low, we have a rally, lower, rally, lower. But do you see how even though we've gone low, lower, lower, MACD has stayed positive? That shows that the momentum is slowing. So there was a lot of reasons that I bought this on the 5th of September. The very next day, it went down a little. Today, you can see we had earlier in the day a monster day. I did take about 15% of my position off here. I took another 15% of my position off here. I got within, I don't know, 11 cents of this third profit target, and unfortunately, I didn't get it right. I put in these limits in the evening time, and you know, I woke up and went, oh my gosh, I didn't quite get it. It would have been nice if I would have, you know, been up and had seen it. I may have just manually taken it because it was so close. But unfortunately, I did not get that third one. But fortunately, I got this one and this one. So this one really could go either way. What I don't like about this today, of course, I don't like that we went up so much higher and reversed. This is a reversal candle. We are up higher than the previous day's close, but we are currently lower than the open. And in addition, we tested this previous range here and rejected it, came back down. So I'm going to just see where this closes. My gut right now is telling me just to go ahead and lock in the profit on the trade from the two profit targets that I have. We are closing, looks like, lower than 50% of the bar. That's not good either. This could go either way, but you know what's not debatable, there were a lot of sellers up at this level right here. So I think more than likely, unless we have some major turnaround here, more than likely I'm probably going to go ahead and just lock in profits, be grateful that it is a profitable trade, that I got one here much higher, but we rejected this previous high, reversed back down. We thoroughly rejected the 20-day EMA, downward sloping, I might add. But you know, this one could just turn around and go back up. I mean, you never know. But it is up today on a down day, so that's positive. But more than likely, unless this closes much higher in its daily range here, I'll probably go ahead and just get out and be happy with the game. Hey, Max B, how you doing? Max says one exit depends whether your targets are highly accurate, which can be much harder than good entries. Yeah, that is true. That is true, Max. You know, where you exit your trades, where your profit targets are going to be, Max is right. You know, it's hard to be accurate with that. But, you know, with technicals, I think you can define what a probable good exit point is for your profit targets. So yeah, good point. Good point. I think my profit targets are fairly accurate. A lot of the time they are, but you never know. You never know. Boy, I'm losing my voice. Hey, Steve Burns, how you doing, bud? Good to see you. Thank you so much for coming by. It's always an honor. Steve says, hi, Greg. Quiet day, tech lagging, financials leading. My GS Goldman Sachs is doing well. I know. I saw that. I watched your newsletter last night, and it was really good. I saw your trade on Goldman Sachs on Friday. I was going to take that trade as well with that 520 cross, but I had the XLF ETF, and so I didn't want double correlation in financial, but good for us because they both went up, and I was glad to see that one up for you. Max says, unless it is scalping system like green out. Well, you know, my profit targets they're not just completely randomly based. I mean, they're based upon a 0.45 ATR, which is half of just under a half of an ATR, and that's worked out really well for me. Because the first profit target's 0.45 ATRs, just a little bit before the 50%, and two profit targets is 0.9 ATR, which is right before the 1 ATR, which, you know, there should be some inherent resistance there. So, you know, I'm a fanatic about exits. I mean, entries are important, but like you said, you know, I think your profit targets or how you exit a stock is probably the real difference between winning and losing traders. Steve says, great Netflix trade. Yeah, well, it was. It seemed really good earlier, but like I said, good thing I did hit some profit targets, and so we'll see. But I don't really like how it's acting right now. If it closes above the 10-day, that may be a reason to stay in. All right, the QQQ. So this is another mechanical system. I did buy it back here on the 4th of September. I bought it when the 5 crossed over the 20. That is a good long-term profitable back-tested crossover system of trading the QQQ. I bought it here at 183.30. Next day it gapped up. Did hit two profit targets, so I took about 20% of my position off the table, which is nice. Lock that in. The market can't take that away from me. This is a mechanical trade, robot trade. I will stay in this trade until either I phase out to the upside and I'm out of shares, or the 5 crosses back below the 20. So this is a mechanical trade. You know, if this were a discretionary trade, I would be considering getting out here today because, you know, as is right now, it looks like we're, you know, possibly we might close below the previous day's low. If this was a discretionary trade, I would probably be getting out. But because this is a mechanical trade, I'm just going to see it through. I like to have a variation. I like to have some discretionary trades. I like to have some mechanical trades because you never know, you may have a good run. And if you do with a crossover trade, you'll be in it. So, but glad that I did hit two profit targets a few days ago already. So it takes a little bit of the emotion out of the trade because I've already locked them up here at higher levels. So no profit targets today whatsoever. You can see. They are still in the system, but looks doubtful that we'll hit any of these today. But again, this is a discretion or mechanical trade as long as the 5 stays over the 20. All right, well, here is the all-time famous overnight SPY trade. So if you're a regular listener to this channel, you know I do buy the SPY each day at the end of the day, and I sell it first thing the very next morning, every single day. And why would I do such a crazy thing? This is based on a back test from Liz Ann Saunders at Bespoke Invest. With this back test, you have two options. The first option is you could buy the SPY at the open in the morning each day, and you can sell it at the close each day. If you did this every day, buy at the open, sell at the close, buy at the open, sell at the close. If you did this every day since 1993, you'd have actually lost 13.9%. But if you do the opposite, which is what I do, I buy the SPY each day at the close, I sell it first thing the next morning. Buy at the close, sell the next morning, buy at the close, sell the next morning. If you would have used this approach, which is what I use, since 1993, you'd have actually returned a positive 634.2% from 1993 to January of 19. Stephen Burns did a more recent study about a month and a half ago from 1993 up till about a month and a half ago, and his numbers came out to be a positive 712.63%. So you can see the blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see this certainly does have a edge built into this system. But as with any edge, you need the long term for it to really work itself and play itself out to take advantage of the edge. That's why it's important to position size correctly so that you can stay in the game long enough for your edge to work out. There are drawdowns. I mean, here is a couple year drawdown, about a year drawdown. So you can't get discouraged when it starts going against you, because you can see in the long term it does have a nice upward edge to it. So I use a 10% position size. So if I had $100,000 in my account, I would buy $10,000 of the SPY in the afternoon, right at the close, sell it first thing in the morning. So I do like, this does give me some diversity with my other trading approaches, like the discretionary approach, the mechanical approach, the selling puts. But I kind of look at this as a overnight day trade that has an edge. So with that being said, I did buy it on Friday at the close at 298.05, and I exited right at the top today at 299.10. And let me just mention real quick, we know the market's gone up since 1993, right? So how could this possibly, buying in the open, selling in the afternoon, return a negative percent? It shows that all the gains, now think about this, all the gains from 1993 have come from the after hours trading and the pre-market session. People bid it up in after hours, people bid it up in the morning before the market opens, and they sell it into the open. And you can see this is exactly what happened here today. This was a really nice trade, right? Sold it at 290, or bought it at 298.05, sold it at 299.10, and we're much lower than that. We're 95 cents lower than that. It's exactly what happened. It gapped up, people sold right into the close, but it was a nice profitable trade. So happy with that. I will be buying this again at the end of the day. Okay, SSO. SSO is the double leveraged S&P 500. I did buy it on Friday when the 10 EMA crossed over the 50 EMA. This is a mechanical system. It's a good back tested profitable approach to trading the SSO. It's roughly right where I bought it. It's 3 cents lower than where I bought it. Now on this particular trade, I'm gonna trade this and approach this as a mechanical robot trade as long as the 10 EMA is above the 50. However, I did not like where I had to buy this up here. I'd much rather buy it here underneath the 1 ATR and above the -1 ATR. This is the area that I like to buy it. So on this particular trade, I am trading it mechanically like a robot, but I only took a half position because of the area and the zone was a little high for my liking. So this is double leverage. So on a double leverage, I would normally take a half a position, but I took a half of a half because I did not like where where my entry was. So I only took a quarter position, which really gives me a half position. If we come back into the value zone or we get some kind of price action like a V1 or V2 here, I have the option of adding my second half as long as the 10 is still above the 50. And if you've been watching this channel for a while, you've seen me do that several times. So if it keeps moving up, I'll continue to phase as long as I have shares until I run out of shares, or if the 10 crosses back below the 50, that will be my exit. But again, I only took a quarter position on this because of the level, the high level up here above the second ATR channel. I feel like it's pulling the rubber band a little tight here. But if the 10 stays over the 50, but we get some type of positive price action like a V1, V2 here today, I might add the second half of my position. Just not sure. We'll just have to see how things go. Mount Doji's finished my call. Good. Good. Steve says, Greg, are you showing a 1050 EMA crossover on Disney? I am showing a cross on stock charts, but no cross on TrendSpider. 1050 EMA on Disney. Yes, I am. The 10 EMA is 137.6 and the 50 EMA is 137.53. So currently, yes, it's crossed by 6 cents. If you want me to watch that at the end of the day, just remind me, and let me write it down here. So we'll watch that. Let's take a look at that real quick and see how we doing on time. Ugh. Boy, the time goes by so fast. Let's see how that back tests. So let's look at the 10, 50 exponential day of cross on Disney and see how that back tests. Oh, back tests pretty well. 264.3% with the crossover. Buy and hold 315.5. The drawdown much less than the buy and hold 50% compared to 67.9%. About a 34.4 win percentage, but a 15.5 medium win, 3% basically loss. So, you know, you have a 34.4 win percentage, but your win to loss is about 5-1. That's pretty good. So maybe we should watch that at the end of the day. All right. Oops. Ah. Oh gosh, come on. All right. All right, XLF is our last position. I did buy XLF back here on the 28th of August. The previous day we closed under the 200. On the day that I bought it, we closed above. Again, this is another back-tested, long-term profitable approach to trading XLF. When it closes under, then it closes over. You can see this has been a great trade. I've scaled out, scaled out, scaled out, scaled out, hit 2 profit targets today already. And, you know, we could be challenging this one up here. Who knows? I mean, it's about 16 cents away. I don't know if we'll get there. Looks like at the moment we're closing above the third ATR channel. That's very, very strong. So again, this is mechanical trade. I've scaled out of a whole lot of this, large position of this, probably about 65-70% of this. So if it continues to move up, I'll continue to scale out till I'm out of shares, or comes back down, closes below the 200. So that's the plan. So beautiful day today, actually all in all, it's been a really, it's been good. So, all right, let's take a look here. Oops. All right. So listen, as you guys know, I like to talk about trader psychology. I like to take a look on Twitter. I like to look for traders and trading coaches that have good sayings, you know, that kind of mean something to me and I think would be helpful to you. This is from Akil Stokes, at Akil Stokes RTM. He has a great channel. He does a daily video that he puts out on his Twitter channel, where he talks about different trading concepts and different psychology trading concepts. And I really enjoy it. And I would really suggest that you subscribe to him at Akil Stokes RTM on Twitter. He is really good, really sincere, and has some good information. But he says having a rule-based approach to your trading is the difference between treating it as a hobby and treating it like a business. Properly run businesses make significant money. Hobbies don't. And you know, this could not be more true. Trading is a business, everybody. It's not a hobby. And if you have in your mind the distinction that it's just something that you do to have fun with, have some entertainment, have some excitement, and you're not you know, putting the time into it, you're not adhering to your plan, then it's a hobby. You know, I know people that have traded for many years and then they took the leap into doing it for a living, and boy, did everything change, because all of a sudden it wasn't as fun anymore and it was more like a business. It had to be rule based and they had to stick to it. But there's a huge difference with treating trading like a hobby and just something to have fun with, and treating it like a business. But it is a business. So, get it in your mind that it's a business. Don't try to have too much emotions with it. Adhere to every part of your plan, treat it like a business, treat it with respect. And in the long run, this will work out for you. But if you're just in it to have fun, to have some excitement, then you're not going to respect the rules like you would if you had to do it for a living. So having a rules-based approach to your trading is the difference between treating it as a hobby and treating it like a business. Properly run businesses make significant money. Hobbies don't. So if you want to make significant money in this game, everybody, get yourself a rule-based plan and follow that plan and treat it like a business. But thank you, Akil. I appreciate you and everything you do when you put out your videos and all your good information and your trading words of wisdom. But I really do enjoy your channel, and so I would recommend everyone go and follow him and watch his videos as well. All right. So how we doing here? All right. All right, well, let's get to it and go down through the watch list. What do we have? We have about 24 minutes. It should be enough time. All right, so Apple's up about $1 today. It was up much higher. We did break out of this previous range today intraday, but at the moment looks like we're closing under, which is not a great sign. I can't do anything with this up here. It's just too high. It doesn't offer me a good risk to reward ratio. I would like to see this come back down into the value zone in between the two green lines, consolidate, move sideways, have an attempted move down that gets immediately reversed with the V1 or V2. That would be what I would be looking for as far as an entry in Apple. Alternatively, if we got down, went under the 30 RSI, back over the 30 RSI and a deep dip, that would be another approach for me, but nothing on Apple today. Adobe, well, we've been talking about Adobe. We've had this sidewards movement, and I mentioned, whenever you have sidewards movement over a long period of time, I can assure you it's going to break either up or down. I just don't know what direction, and I don't know when it's going to happen. This may be the signal that it's breaking to the downside. I mean, it did have kind of a large move, larger than 1 ATR, took out all these lows. So, is this going to be the beginning of a move downward? It's possible. I don't know. I would be interested in buying Adobe if we could go under the 30 RSI and back over the 30 RSI. Currently, we're at a 40.64, so not quite there yet. It's in no man's land. There are people waiting down here at the 30 RSI. They are waiting to buy this because it would put them in a position to have a good risk to reward ratio. If we went under the 200, back over the 200, that might also be a good confluence of signals, but nothing on Adobe yet. But let's be patient, wait for the market to come to us, right? And right down in this area, I think would offer us a good risk to reward ratio. Silver, we had this big move up. We finally got some selling. We are back into the value zone. That is what I was waiting for. I'd like to see this move sideways, show that the selling's dried up, spike down, reverse, get a V1, V2. That might be, I think that would be a good potential entry, but, step one, we have to get into the value zone. We're there. Step two, we have to start moving sideways. I need more sideways than just 2 days. And then step three, I would need a V1, V2. And, possibly we go back up and test. I have no idea, but that would be, the plan. There should be some support here. See these previous highs here. This acted as resistance and we broke out. This previous support should act, or previous resistance should act as some support down in here. So if we could come down to here, get a V1, V2 under the channel, back into the ATR channel, I think that would be really good. So $31 right in this range is kind of where I'm looking. So, be patient. Don't jump the gun at 33 when really 31 is probably the area. AMD is just moving sidewards here. We are in the ATR channel. We are in value. We are consolidating. That's good. If we got a V1, if tomorrow we came down, reversed back up, had a V1 back into the value zone, that might be interesting, but nothing there today. Amazon, of course, we have this. We bought this down here at 1765. I am going, if today's close closes below Friday's close and triggers a valid V1 to the downside, I will go ahead and just lock in this trade. This has been a great trade. Boeing, it's been above, below, above, below, above, below the 200-day moving average. I can't buy it up here. It's just too high. It's I like to make most of my purchases under the channel or at the very highest, usually about 3/4 of the channel, but this is just too high for me. Alibaba. Found some resistance here at this previous range. It's a 58 RSI. We're up near the second ATR channel. Really nothing to buy here. I was considering it buying here, but I ended up buying something else. But see this nice V1 and rejection of the 200 and then close back above the 200. I guess that really would have been the time to buy. That's the day I was looking at it, but I ended up buying something else. Caterpillar, look at that. Big day. Rejected the third ATR channel 2 days in a row. And Caterpillar said, I don't care, and just continued up higher. So any of you have, I think somebody has Caterpillar. I can't remember who it was, but great day on Caterpillar. Congratulations. DBC, nothing on DBC today. It's outside of the channel. DDM we have back here. Disney, we'll just keep that one there. So currently Disney does have the 1050 EMA cross, so we'll watch that. Etsy, man, Etsy is just schizophrenic. I mean, it was up, then down, under the 30, now back over the 30. I don't think I'm going to mess with it here. It's just been too erratic. It looks like it might close over the 5-day, but I'm just going to let that one go. Ford's having a really strong day. This was a nice trade. If you would have bought over the 200, it just would have kept you right on in, but nothing on Ford. Facebook, really nothing on Facebook here. It's too high outside of the green lines, the 1 and the -1 ATR channel. 5 below, it's up near the third ATR channel, much too high for me to buy. Gold, well, listen, we made this higher high, we came back down into the value zone. We haven't really moved sidewards much. If we could move sidewards for a couple more days, have a spike down, reversal, get triggered into a V1 or a V2, would be good, especially because if it rejected the -1 ATR channel and closed back in, that might be good. But again, getting into the value zone is step 1. Step 2, it has to start moving sidewards. Step 3, we have to have a reversal with the V1 or V entry. So, this is a dip buying situation, but I need some kind of trigger to get me back in. Google, bearish engulfing bar to the downside. I was waiting for the 1030 SMA cross, but we do not quite have that, so nothing on Google today. Goldman Sachs, great trade, Steve. Steve took this trade 2 days ago? Yeah, 2 days ago when the 5 crossed over the 20, and you can see he's had a nice move up, 2.52%. Nice going, Steve. So nothing for me here today on Goldman Sachs. IBB is biotechnology. It's just moving sideways. There's just nothing here. It needs to go lower or higher. It needs to go high when we have the 5 cross over the 30. That would be one approach, or another approach would be buy a deep dip if we could get under 30 and back over 30 RSI wise. Intel just chugging away. Had that nice close above the 200, but it was just too high for me to buy. Doesn't mean it can't go up. It certainly does, as this indicates here. But you know, the majority of time, you do this 100 times, much more than 50% of the time you buy it up here, and that would be near the top. So anyway, if you guys have Intel, congratulations. That's moving nicely. Russell. Looks like it's closing above the 200-day moving average. MACD is positive. RSI is above 50. That's all. That's not too bad, really. That's not too bad. Let me mark that. Johnson & Johnson, nothing there. Coca-Cola, it's been moving up, now back into the value zone, so I am looking for a dip on KO. But nothing's set up yet. I better hustle. Okay, Lockheed Martin, same thing. It is back in the value zone, looking for a V1, V2, nothing there. MasterCard really sold off hard at that third ATR channel today. Don't know what's going on with MasterCard, but that is an ugly bar. I would like to see this stop moving down, moving sidewards, have a V1, V2 to back to the upside now that we're back in the value zone, but nothing there. Altria, not doing much, nothing there. Merck had a huge day down. Look at this, guys, 3.82%. Where would I be looking for a buy on Merck? I would be looking for, maybe down here at the 200-day, or close under the 30, back over the 30, wherever that might happen, but nothing there. Microsoft having a tough day as well, back into the value zone, big bar, larger than 1 ATR, nothing there. Netflix we have. So this is what I'm going to do. As long as it closes over the 10-day, I will keep it. Closes under the 10-day, I will get out. But it's worked out so far, and glad that we got this profit target higher today. So that one's worked out nice. So as long as it holds above the 10, I will hold it today. Nike, way to go. Mount Doji, that's still going up. So that's great. Still closing above the third ATR channel. Has not had a close below the previous day's close. That is good. That would probably be my exit on Nike if I was in that trade. Philip Morris back over the third ATR channel. Really nothing there. PayPal, ugly, nasty day today. You know, we might want to watch this with a close under the 200, back over the 200. So, you know, this may have another day or two to the downside. This was a huge amount of selling, down 4.4%. My gosh. The Qs we bought that on the 520 cross. Got out of 2 profit targets here. It's just moved sideways. No profit targets today. Snapchat down 7.76%. My gosh. Remember, we were talking about this on Friday, but I did not want to buy this because it was so close to the 1 ATR channel, and good thing I didn't. S&P, we're going to buy that at the end of the day as usual. Nice overnight trade last night. Square. You know, this is bullish here that we went all the way down and recovered back into the value zone. I mean, that is good. This is a double bottom with the bullish divergence. Here's a low. We have a rally. We made a lower low. You can see there's no red bars. That means that the momentum on this move down is much stronger than this. And if you start running out of momentum to the downside, most likely you're probably going to go back up. But I would need some kind of trigger on this today to really get me in. But you can see we did break down to the lower range and come back up. So as it is right now, this is a false breakout to the downside, but there's really no trigger there for me. Possibly a V2 tomorrow. SSO we're about dead nuts even on that right now. TLT, We talked about this about a week ago. I said, you know, this is looking a little toppy. We have a high, we came down, we have a double top. We're running out of positive momentum to the upside, and that was right. So it's moved down. So nothing there. Tesla, it's just too high above the channel. Nothing there. Twitter, down today. It had issues here with this third ATR channel, like a lot of stocks do. You know, it's very difficult to get above the third ATR channel. It just is. So, you know, for me to look for Twitter, I'd like to see it come back down into the value zone here, consolidate, move sideways, and get some kind of V1, V2 trigger back up. UNG has just been on fire, literally. Nothing I can do there, but my goodness, that's strong. UNH moving sidewards here, consolidating. I imagine this is probably going to break one way or the other. I just don't know which way, but nothing there. Oil, I did consider buying oil here on Friday because of the close under the 200 back over and the V1. I didn't buy it though because it was too close to the 1 ATR channel. It was just a little too high for me for my filters that I use, but it would have worked out nicely. The dollar, big move higher. Again, we're back in the value zone. I'd like to see some consolidation, V1, V2 entry, but nothing today. VIX, it's been in a downtrend. I believe that the 1030 EMA cross under has happened, which is good. That's good for stocks. That's showing that we're going to a lower volatility environment. That's good for stocks. So that is good, but nothing on VIX. Verizon had issue with the third ATR channel. Walmart, strong day, just too high for me to buy. Energy, Select, boy, that's had a pretty nice day there. I don't like this confluence of the third ATR channel and the downward sloping 50-day SMA, so I think it's a little chasey there for me. It doesn't offer good risk to reward. Financials, of course, we have back with the close under, back over the 200. That's worked out nicely. Let's take a look here. So nothing new on that. XLE, a lot of moves made this higher, you know, this higher high. And so there's a lot of potential dip buys for us to have here. This isn't quite in the value zone. Utilities, same thing. It's moving itself back into the value zone. We need to wait for a V1, V2. Healthcare, not so hot. And pharmaceuticals, we do have a MACD crossover, but really nothing there. So for today, we have two options. We have Disney, and let me quickly run my numbers on this. I'm glad Steve brought that to my attention. So we have two options. Disney with the crossover. Are we going to have the crossover? So far it's there. So far it's there. And the other option would be the close over the 200-day at the 54 level. You know, I think, honestly, this is what I'm going to do. I'm going to take a half position on this Disney crossover because the crossover happened over the 1 ATR channel. We don't have a lot of positions right now. We're pretty light, but I want to stay conservative. All right. So the 1050 EMA does backtest well on Walt Disney. It's a little higher than I would like, so I am going to take a half a position as long as it closes above, and it looks like it's going to. So let me take a look. All right. Give me 45 seconds, guys. I apologize. I have to move my dog around. I'll be right back. Man, my dog has like the best sense of time ever. With about 10 minutes to go, she always makes her move and makes me do her bidding. All right. So quickly, Amazon, is it going to close under for the V1? To be determined. If it is, I'm going to get out of it. Dow Jones, the DDM is fine. Netflix looks like it's going to close there, so I'm going to keep it. Q's is fine. SPY we're going to buy at the end of the day. SSO is fine. XLF is fine. So I'm going to go ahead. I'm going to buy a half position on Disney today based upon the 1050 EMA cross. And thank you, Steve, for pointing that out. That wasn't on my radar today. But as you can see from the ETFreplay.com, it does backtest well. So I like the price action better of Disney than I do of Amazon at this point. All right, so this is what I'm going to do. I'm going to go ahead. I'm going to get out of Amazon because I have such few shares left and just have less things to think about and to chart. So let me get out of Amazon.
Order filled.
Just lock in that entire position. That was a great trade.
Order filled.
All right, so Amazon's out of the way. I'm taking a half position with the 1050 EMA crossover on Disney, and I'm taking half because the prices are above the channel, the 1 and the -1 ATR channel, which concerns me a little bit. But if it does move, I still want to have some exposure to it. All right, so Amazon is gone. And it looks like Disney is going to have the crossover. And it looks like Netflix is going to close above, so that's all good. All right, so we have 1 minute left. Netflix looks like it's holding above the 10-day, so that's good. So I will keep that. Amazon, we got out. I think that looks like that was the right decision. And then Disney definitely looks like it's going to close above. So we have 30 seconds. All right, so I'm going to go ahead and I'm going to buy Disney.
Order partially filled. Order filled.
A half position.
Order partially filled.
138.
Order filled.
87. All right. So let's put Disney on there.
Order cancelled.
All right.
Order filled.
So Disney
Order cancelled.
we bought at 138. 87. Because the 10 crossed over the 50. This is a discretionary trade now. I use the 1050 as my mechanical entry, but I will be managing this trade discretionarily now because it is a stock. And then our S&P we bought at 298.20. 298.20, and that's exactly where it closed. So, all right. Well, listen, all in all, it was a really nice, profitable day. That was really, really good. Especially that the market wasn't up that much, but Netflix definitely helped out there, and the overnight SPY trade definitely helped out there. So, all right. Well, listen, let's get to comments and questions. If you have any questions, anything, sorry, I've been blabbing here, but there was a lot to take a look at today. Please let me know, and I'll do my best to answer. Just real quickly before the answers, let me just put in my quick plug. I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I really do like to teach. I've had really good success with my clients. I've changed my approach around just a little bit. To have more hours involved. So I do have a course. It's 10 hours. It's 5 2-hour Skype sessions in the evening time. And, I teach you everything I know. Like I said, I've had great success with my clients. What I do like to do, if you're potentially interested, I do like to have an initial conversation with the potential client first. I like to know a little bit more about them, about their trading methodology, what their experience has been, what their challenges are, how much screen time they have available, kind of the financial situation. Then I'll put together a customized lesson plan, and hopefully will help you achieve your trading goals. And here on the live stream, I do all the talking. But in the one-on-one sessions, I teach, and then I have you teach it back to me. And that way I really know that you know it. And I'm not going to let you go until you have it figured out and can teach it back to me. And so anyway, if you're interested, my email and my rates are in the description of this video. So, send me an email. Tell me you want to set up, the free call, or send me a message on Twitter, and I'm happy to do that and happy to get to know you a little bit better. And then lastly, if you've enjoyed this today, if you're learning anything from this channel, if you haven't subscribed, please subscribe. And at the very least, if you could hit the thumbs up button, it would really help me get this channel out to more people. It helps YouTube promote it. And I get a lot of emails from people saying, Greg, thanks for the channel. I'm learning a lot. It changed my way of how I view trading. I'm cutting my losses now. I'm letting my winners run. So, that's why I started this channel, really was to help people become better traders and to lose less money. So, help me help them by hitting the thumbs up button. And, if you can share it on social media, something like that, that would be awesome too. So, all right, that's the end of my plug. And let's see what people have to say. So, all right. Max says, what do you think about Etsy today? So I'm a little concerned with Etsy because, we went under the 30, back over the 30. We immediately lost the 30 the previous day. Today we've gone back up again. There's some positives and some negatives. I mean, we have a bottom, we have a rally, we have a lower low. We do have a bullish divergence, which is good. We're still under the -1 ATR channel. We had the gap today. This could go either way, but I mean, obviously I didn't buy it today. It just concerns me that it can't get 2 days in a row up. Who knows? This is probably the day that it's just going to go up. It's up 5.25% today. But I guess actions speak louder than words. If I had really liked it, I would have bought it today. The thing that concerns me is okay. So here was the previous low. We've rallied. Now we've come down into this new range. We are going to have some resistance when we get up to the low of this previous low here. We are going to find some resistance here. So I don't think it gives a very good risk to reward. What I think really the way I would approach Etsy is now we've made a lower low. Maybe it was going to run up for a couple days. If it stalls out, we're probably going to move down a little bit, and then I'll look for a higher low V1 entry. That is my take on Etsy, Max. Oh, Steve said Etsy is over the 30 RSI but range bound. Steve says finally the 1030 EMA VIX crossover with the confluence of the 1050 crossover in the leverage ETFs. Yep, that's right. So that's what we were looking for. We were looking for the 1030 EMA cross under on the VIX to show that we're going to a lower volatility area, right? So that is good for stocks. So, and at the same time, we have the 1050 crossover to the upside on the leverage ETF. So, those are two positive indications for stocks and negative for VIX. Although that happened, doesn't mean stocks are going to go up, but at least it's a good sign, right? Johnny says, I have some cat. That's right. I remember somebody told me they had some cat. Fantastic, Johnny. What's your plan here, Johnny, on managing cat? Is this just a long term? Is this a trade? I'd like to hear your ideas on how you're going to manage this trade. Johnny says, MDR was my best trade. It had a huge gain today, so I sold it for a 20% profit. Holy smokes. Let's check this out. Whoa. Holy smokes. Fantastic. So I sold it. Nothing wrong with taking a 20% profit. Congratulations, John. Johnny's got like this special touch, man. You have these huge monster gainers. Good for you. Murat, hey buddy, how you doing? That's our friend Murat from Norway. Good to see you. Thank you for coming by. Anthony says XLV. Let's take a look at XLV, Anthony. So, I would not be interested in this today, Anthony. I mean, we had way back here on the 27th, we had a close under the 200, then a back over. This would have been a decent place to buy because you had the close under, the close back over. If you're wrong small with the close under. But now that it's moved up, I don't think I would have bought any, and I certainly don't like the price action of what happened today. We had a big bar down to, I guess, just a little bit larger than 1 ATR. So any price movement larger than 1 ATR shows, an abnormal amount of selling. I think if I really wanted to get into XLV, I would need another close under the 200 and then back over the 200. So that's how I would approach this, Anthony. But I wouldn't want to buy on this weakness. It's not weak enough. A close under the 200 back over, that would be one option. Or if we could get a 30 RSI, under 30 back over 30 at the same time, we're down here at the third ATR channel. But this is all the stuff I'm going to be teaching you, Anthony, starting tomorrow. Hey, John, good to see you. John says, thoughts on FRN? Guggenheim Frontier Markets. Okay. Well, it looks like we closed under the 200. That is not especially bullish because the buyers of the 200 were not strong enough to hold it up. Let's look at the weekly. We might find some support here at the 50-week moving average. We're at a 34.84 RSI. Let me see where the 30 RSI is going to be tomorrow. Whoa. Right about here, 1341. I mean, the way that if I really wanted to get into FRN, John, I would like to see this go under the third ATR channel, under the 250-day moving average, under the 30 RSI, and then back over. I think that's where you're going to start to see some people come in. But, you know, alternatively, if it closes back above the 200, but I would really like to see this wash out and then close back over. TWLO. You know, not looking real good. Lost the third ATR channel, lost the 250-day moving average, lost the 30 RSI. That's all very bearish. You know, if you wanted to, with the close back over, you could buy the 30 RSI, target the 50 RSI to the upside. If it closed under the 30, you know, get out for a loss back under the 30. But that way, you know, most likely you'll have a small loss and you'll have, many more times to the upside. I mean, if you buy at 31 and you target a 50, right, that's 19 points. If you buy at 31 and you're wrong and you close under the 30 barely, then that's a very small loss. But this really concerns me. Lots of volume. Just because something comes to the 30 RSI and back over, it kind of depends on the context of the chart. If it's just one big monster bar that does it, it concerns me. If it just kind of moves its way down there, pokes one day and goes back up, I'd much rather buy that. But I really don't like this personally, John. VOD, doing great, but you know, for me, it's just too high. I mean, it's above the third ATR channel. It closed above the 30 ATR channel, which is good, but I would need this to pull back into the value zone. The value zone is between the 1 and the -1 ATR channel. Move sideways, consolidate, have a V1, V2, but the risk to reward here right now I don't like. Hey, Frederick's here. That's our friend from France. Hey, I hope you're having a good time at your bike show, or you had a good time if you went. But thanks for saying hi, Frederick. Miss seeing you, buddy. Anthony says, no, that's a typo. Oh, okay. I typed in here instead of on my chart screen, but thanks. Oh, no problem. Well, at least we broke XLV down. At least we broke XLV down. But yeah, really nothing on XLV. All right. So, we did enter Disney today because we had the 1050 EMA crossover. We entered it here, 138.87. It happened outside of the channel of the 1 and the -1 ATR. So generally when that happens, I take a half position. So I did take a half position here, 138.87. If it continues to move up, I will continue to phase out. If we get up to a 70 RSI and reject, I will go ahead and lock in profits then. If I'm wrong and the 10 crosses back under the 50, most likely I'll be wrong small. So that is Disney. Amazon, we said goodbye to Amazon, but that was one heck of a trade, right? From here up to here. But the V1 did confirm to the downside. So we locked in the remaining balance on Amazon. That was a great trade. So thanks for doing business with us, Amazon. Lord knows I do enough business with you. So we'll take Amazon off the charts. DDM is our mechanical trade. It's doing really, really well. Netflix, I did keep Netflix because it did close back above the 10-day moving average, and so that is good. Continue to phase out to the upside. If we get up to a 50 RSI, reject it, close under, I will go ahead and get out there. To the downside now, Probably a close below the 10 or a close below today's low will be my exit on Netflix. Qs we bought with the 520 EMA cross. That's moved up nicely. We've phased out, nothing there. SPY, we bought that again today at 298.20, so I'll sell that first thing in the morning. SSO up very slightly on the trade. We took this because of the 1050 EMA cross, same thing we did on Disney. Again, I took a half position here because it happened outside of the channel. I really like to buy stuff in the channel because your easiest moves you're going to have are in the channel up to the third ATR channel, in the channel down to the negative third ATR channel. The higher and closer you get up here, the more the rubber band's pulled. But if you want to take the signal, then I just take fewer shares like I did on SSO. And then XLF, this has been a really nice trade. It's moved up nicely for us. 2 profit targets today. So we're getting to the point where we're about to start running out of shares on XLF. All right. So any other questions about what I did today or didn't do today, or if you'd like me to take a look at any other symbols, I'm happy to do that. So if you have any questions, let me know. Otherwise, I'm going to get my hiking boots on, go up into the mountains, reflect on life, reflect on how I traded today. You know, every day after I get done trading, I go hiking, and I do spend a lot of time on my hike thinking about how I traded, you know, and I really try to pinpoint, was there something I took that I wasn't supposed to take? Was there something I stayed in that I really should have got out of? And most of the time, I have a pretty clear conscience about it. You know, my goal every day is not to do something impulsive. And, you know, when you're in the last few minutes of the day, you know, it's easy to do something compulsive. Even if even if you're looking at it with good intentions, sometimes because you're up against time and, you know, you make the trade. So I always really like to reflect back over and say, okay, did I take that? Should I have taken that? And I try to be pretty critical of myself. And my goal at the end of the day when I'm up hiking is to have no regrets about what I did that day. That's really my goal. You're welcome, Shelton. Thank you. Appreciate that. Thanks, Johnny. I will have a good hike. So, all right. Well, if anybody has any more questions, let me know. Otherwise, let me just say goodbye to everybody. Johnny, thank you. Nice job on your 20% return. My goodness. Way to go, man. Way to go. But thank you for coming by, John. I appreciate it. Shelton, thank you, sir. Really good to see you. Anthony, look forward to working with you tomorrow. Hope you have a good rest of your day. Frederick from France, good to see you, my friend. Hope you're doing well over there. John, I hope that helped on those 3 stock symbols that you wanted me to take a look at, and I hope you're doing well. Murat, good to see you. It's our friend from Norway. Steve Burns, always an honor to have you here. I'm always excited when you're here. Makes me feel like I need to do my A game, and I know everyone else is excited. So thank you very much, and great trade on your Goldman Sachs trade today. Max, good seeing you. You always have great questions. Thanks for coming by. Mount Doji, what did Nike do? So Nike was down a little bit. Mount Doji also has McDonald's. Oh. So McDonald's was down today. I think if I had been in that trade, I probably would have gotten out today with the close below the previous day's low. But who knows what Mount Doji did. If you're still listening, let me know. Marco, thank you for coming by. One of my favorite names. And let's see. JT, as always, good to see you, my friend. So, all right. Well, I think that's it. I hope everybody has a good rest of their day. Go out and do something nice for somebody today. Give them a wave, give them a smile. Generally, just be nice. We need more of that in our world, right? And, you know, just making one little effort might change somebody else's day, and will be good for you as well. So anyway, if you guys can make it tomorrow during the last hour, we will do this all again. And in the meantime, have a great rest of your day. And if you have any questions that you didn't get to or didn't think of today, feel free. You can email them to me, or you can send me a message on Twitter as well. So, all right, take care, everybody. Talk to you later. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor, or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast, or their clients, may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading, and therefore may under or overcompensate for the impact of various market factors, such as lack of liquidity. Thank you.